Question 1. Which exam-tested phrase in full SIE exam is linked to a firm in the business of securities transactions for customers or itself? Option A, broker-dealer. Option B, issuer only. Option C, custodian only. Option D, investment advisor only. The correct answer is option A, broker-dealer. A broker-dealer conducts securities transactions as agent, principal, or both. An investment advisor is paid for advice, an issuer sells its own securities, and a custodian holds assets. Question 2. When full SIE exam review mentions few buyers and sellers available for a security, which term applies? Option A, liquidity risk. Option B, inflation risk. Option C, credit risk. Option D, currency risk. The correct answer is option A, liquidity risk. Liquidity risk is the risk that a security cannot be sold quickly at a fair price. Inflation, credit, and currency risk describe different concerns. Question 3. If a full SIE exam STEM gives only a fee for withdrawing too much too early from an annuity, which answer is safest? Option A, markup. Option B, surrender charge. Option C, 12b1 fee. Option D, bond discount. The correct answer is option B, surrender charge. A surrender charge penalizes early annuity withdrawals during a surrender period. Markups are dealer charges, 12b1 fees are fund distribution expenses, and bond discounts refer to price below PAR. Question 4. A SIE full SIE exam item describes a bearish or protective options position. Which answer fits? Option A, bull spread only. Option B, covered call. Option C, long put. Option D, long call. The correct answer is option C, long put. A long put benefits when the underlying falls and can also protect a stock position. A long call is bullish, a covered call involves selling calls against owned stock, and a bull spread is a different multi-leg strategy. Question 5. Why would losses from a passive program generally limited against passive income lead to one specific full SIE exam answer? Option A, wash sale rule. Option B, passive loss limitation. Option C, SIPC advance. Option D, dividend exclusion. The correct answer is option B, passive loss limitation. Passive loss limits affect how DPP losses may be used for tax purposes. Wash sale rules apply to securities losses, dividend exclusion is not the DPP rule, and SIPC advances relate to failed brokerage firms. Question 6. What should stand out in a full SIE exam STEM about an order requiring prompt handling without time-price discretion? Option A, GTC order. Option B, held order. Option C, not held order. Option D, discretionary order. The correct answer is option B, held order. A held order must be handled promptly under the customer's instructions. A not held order gives time and price discretion, GTC describes duration, and a discretionary order allows broader trading decisions only with authorization. Question 7. Which choice best matches information a reasonable investor would consider important on a full SIE exam question? Option A, material information. Option B, PR quotation. Option C, public rumor. Option D, nominal value. The correct answer is option A, material information. Material information is information a reasonable investor would likely consider important in making an investment decision. A public rumor may be unreliable, nominal value is not the test, and PR quotation relates to bond pricing. Question 8. Review the scenario limits on business-related gifts to prevent conflicts of interest. Which full SIE exam choice matches? Option A, gifts and gratuities limit. Option B, breakpoint discount. Option C, margin interest. Option D, dividend exclusion. The correct answer is option A, gifts and gratuities limit. Gift and gratuity limits help reduce conflicts and improper influence. Breakpoint discounts reduce mutual fund sales charges, dividend exclusion is a tax concept, and margin interest is charged on borrowed funds. Question 9. A short full SIE exam question says cash coverage being part of the overall SIPC protection amount. Which option wins? Option A, cash sublimit. Option B, bond coupon limit. Option C, ETF expense limit. Option D, unlimited cash coverage. The correct answer is option A, cash sublimit. SIPC cash protection is subject to a sublimit within the overall protection amount. The other choices are not SIPC coverage rules. Question 10. Can you spot the full SIE exam answer when the clue is a representative doing securities business outside the firm without approval? Option A, pegging. Option B, front running. Option C, hypothecation. Option D, selling away. The correct answer is option D, selling away. Selling away occurs when a representative participates in outside securities transactions without proper firm notice or approval. Front-running trades ahead of orders, pegging manipulates prices, and hypothecation pledges margin securities. Question 11. Which full SIE exam answer is hidden inside the clue? The usual 50% initial equity requirement for buying stock on margin? Option A, Regulation T. Option B, Rule 144. Option C, SIPC Rule. Option D, MSRB Rule G37. The correct answer is option A, Regulation T. Regulation T sets the initial margin requirement for many securities purchases, commonly tested at 50% for stocks. SIPC rules protect customers after firm failure. MSRB Rule G37 covers municipal political contributions, and Rule 144 governs restricted and control stock resales. Question 12. A quick-fire full SIE exam video asks about up to $500,000 of brokerage protection, including $250,000 cash. Which answer fits? Option A, FDIC standard deposit limit. Option B, MSRB markup limit. Option C, SIPC coverage limit. Option D, Reg T margin limit. The correct answer is option C, SIPC coverage limit. SIPC coverage is commonly tested as up to $500,000 per separate customer, including a $250,000 limit for cash. FDIC limits apply to bank deposits. Regulation T covers margin credit, and MSRB markup limit is not the tested protection figure. Question 13. A SIE full SIE exam item describes work outside the firm that must be disclosed under firm rules. Which answer fits? Option A, ex-dividend date. Option B, cash settlement. Option C, currency risk. Option D, outside business activity. The correct answer is option D, outside business activity. Outside business activity must be disclosed so the firm can supervise potential conflicts. Cash settlement is same-day settlement, currency risk comes from exchange rates, and ex-dividend date affects dividend entitlement. Question 14. Imagine a test item says a dealer selling from inventory above the prevailing market price. What is the best full SIE exam answer? Option A, dividend. Option B, expense ratio. Option C, markup. Option D, commission. The correct answer is option C, markup. A markup is added when a dealer sells a security to a customer from inventory. A commission compensates agency trades, a dividend is an issuer payment to shareholders, and an expense ratio is a fund cost. Question 15. How should a candidate classify short-term rates higher than long-term rates in full SIE exam? Option A, normal yield curve. Option B, inverted yield curve. Option C, flat tax rate. Option D, cumulative dividend. The correct answer is option B, inverted yield curve. An inverted yield curve occurs when short-term yields are above long-term yields. A normal curve generally slopes upward. Flat tax rate is not a yield curve term, and cumulative dividend belongs to preferred stock. Question 16. Review the scenario: the risk of missing a better return elsewhere. Which full SIE exam choice matches? Option A, opportunity cost. Option B, regulatory risk. Option C, currency risk. Option D, credit risk. The correct answer is option A, opportunity cost. Opportunity cost is the benefit given up by choosing one investment over another. Credit risk is default risk, currency risk comes from exchange rates, and regulatory risk comes from rule changes. Question 17. Suppose the exam stem says protection when a broker-dealer fails and customer securities are missing. Which full SIE exam answer is strongest? Option A, FDIC insurance. Option B, MSRB guarantee. Option C, SIPC protection. Option D, SEC performance guarantee. The correct answer is option C, SIPC protection. SIPC protection applies when a broker-dealer fails and customer assets are missing. FDIC covers bank deposits, MSRB does not guarantee investments, and the SEC does not guarantee performance. Question 18. During full SIE exam practice, what does a derivative product needing special risk awareness describe? Option A, options guarantee dividends. Option B, options are not suitable for every investor. Option C, options are insured by SIPC against losses. Option D, options remove all market risk. The correct answer is option B, options are not suitable for every investor. Options can involve leverage, expiration, and assignment risk, so they are not suitable for every investor. They do not remove all market risk, SIPC does not insure against trading losses, and options do not guarantee dividends. Question 19. Where does securities business done away from the firm that requires prior notice or approval fit inside full SIE exam review? Option A, good delivery. Option B, public appearance. Option C, private securities transaction. Option D, cash account. The correct answer is option C, private securities transaction. A private securities transaction involves securities activity outside the regular firm channel and requires firm notice or approval. Public appearance is a communication category, cash account is an account type, and good delivery concerns settlement requirements. Question 20. Which exam-tested phrase in full SIE exam is linked to law creating customer protection through SIPC when broker-dealers fail? Option A, Securities Act of 1933. Option B, Securities Investor Protection Act. Option C, Regulation T. Option D, Blue Sky Law. The correct answer is option B, Securities Investor Protection Act. The Securities Investor Protection Act created SIPC protection for customers of failed broker-dealers. The 1933 Act covers new issue disclosure, Regulation T covers credit, and Blue Sky laws are state securities laws. Question 21. Review the scenario price control that may prevent the order from being filled, which full SIE exam choice matches? Option A, limit order execution risk. Option B, guaranteed fill. Option C, automatic dividend. Option D, firm commitment. The correct answer is option A, limit order execution risk. Limit orders protect price but may not execute if the market does not reach the limit. Guaranteed fills, dividends, and firm commitment underwriting do not describe this order risk. Question 22. A SIE full SIE exam item describes units used to calculate variable annuity payments after annuitization. Which answer fits? Option A, voting shares. Option B, accumulation units. Option C, bond points. Option D, annuity units. The correct answer is option D, annuity units. Annuity units determine variable annuity payouts during the payout phase. Accumulation units apply before annuitization, bond points quote bond prices, and voting shares relate to equity ownership. Question 23. Imagine a test item says the central bank influencing money supply and interest rates. What is the best full SIE exam answer? Option A, Federal Reserve Board. Option B, SIPC. Option C, transfer agent. Option D, MSRB. The correct answer is option A, Federal Reserve Board. The Federal Reserve Board influences monetary policy, money supply, and interest rates. SIPC protects brokerage customers after firm failure, the MSRB writes municipal rules, and a transfer agent tracks securities ownership. Question 24. Identify the tested full SIE exam concept behind an order giving the broker time and price discretion. Option A, not held order. Option B, market order. Option C, held order. Option D, day order. The correct answer is option A, not held order. A not held order gives the broker discretion over time and price but not over the security, side, or size. A held order must be handled promptly, a market order prioritizes execution, and a day order only sets duration. Question 25. After reading a customer losing money because securities declined in value, which full SIE exam concept should not be confused with distractors? Option A, MSRB loss payment. Option B, FDIC stock insurance. Option C, no SIPC market loss coverage. Option D, full SIPC reimbursement. The correct answer is option C, no SIPC market loss coverage. SIPC does not protect customers from ordinary market losses. FDIC stock insurance and MSRB loss payments do not cover declining securities prices either. Question 26. Which exam-tested phrase in full SIE exam is linked to charging an advisory fee for ongoing portfolio advice? Option A, markup only. Option B, bond coupon. Option C, advisory fee arrangement. Option D, sales concession only. The correct answer is option C, advisory fee arrangement. Advisory fees compensate investment advice or management services. Markups and concessions are transaction compensation, while bond coupons are issuer interest payments. Question 27. Why would the investment account supporting a variable annuity lead to one specific full SIE exam answer? Option A, margin account. Option B, general account. Option C, transfer agent account. Option D, separate account. The correct answer is option D, separate account. A variable annuity uses a separate account for investment options, so the owner bears investment risk. The general account supports fixed guarantees, a margin account involves borrowing, and a transfer agent account is not the annuity investment account. Question 28. Pick the SIE term connected to bank deposit insurance not covering stocks or bonds in full SIE exam. Option A. FDIC does not insure securities. Option B. MSRB pays failed broker claims. Option C. FINRA insures bank accounts. Option D. SIPC guarantees market gains. The correct answer is option A. FDIC does not insure securities. FDIC insurance applies to eligible bank deposits, not securities such as stocks, bonds, or mutual funds. SIPC does not guarantee market gains, FINRA is not a bank insurer, and the MSRB does not pay customer claims after broker failure. Question 29. Which full SIE exam concept separates identifying and addressing conflicts in a retail recommendation from the other choices? Option A. ETF redemption. Option B. Bond accretion. Option C. Conflict obligation. Option D. CTR filing. The correct answer is option C. Conflict obligation. Reg BI includes obligations around conflicts of interest. CTR filings, bond accretion, and ETF redemption are separate topics. Question 30. Which full SIE exam clue points to the exchange participant helping maintain a fair and orderly market? Option A. Options holder. Option B. Custodian. Option C. Transfer agent. Option D. Designated market maker. The correct answer is option D. Designated market maker. A designated market maker helps maintain fair and orderly trading in assigned exchange-listed securities. A transfer agent keeps records, an options holder owns a contract right, and a custodian holds assets. Question 31. Which full SIE exam concept separates a stop limit order activating but not filling because the limit price is missed from the other choices? Option A. Guaranteed voting right. Option B. Stop limit non-execution risk. Option C. Guaranteed market fill. Option D. Guaranteed coupon. The correct answer is option B. Stop limit non-execution risk. Stop limit orders protect price but can miss execution after activation. They do not guarantee a market fill, coupon, or voting right. Question 32. Suppose the exam stem says a transaction that creates a new short options position. Which full SIE exam answer is strongest? Option A. Exercise. Option B. Opening purchase. Option C. Closing purchase. Option D. Opening sale. The correct answer is option D. Opening sale. An opening sale writes an option and creates a short position. An opening purchase creates a long position, a closing purchase exits a short position, and exercise uses the option right. Question 33. Pick the SIE term connected to a customer losing money because a recommendation performed poorly in full SIE exam. Option A. FDIC reimbursement. Option B. Full SIPC protection. Option C. MSRB reimbursement. Option D. No coverage for bad investment advice. The correct answer is option D. No coverage for bad investment advice. SIPC does not cover losses from bad advice or poor investment performance. FDIC and MSRB reimbursement do not cover that securities loss either. Question 34. Which choice best matches an insurance contract whose value changes with separate account investments on a full SIE exam question? Option A. Money market fund. Option B. Fixed annuity. Option C. Variable annuity. Option D. Treasury bond. The correct answer is option C. Variable annuity. A variable annuity's value depends on the performance of separate account investments. A fixed annuity provides insurer guarantees, a money market fund is an investment company product, and a treasury bond is government debt. Question 35. During full SIE exam practice, what does difficulty quickly selling an interest in a partnership program describe? Option A. Reinvestment risk. Option B. Illiquidity risk. Option C. Call risk. Option D. Currency risk. The correct answer is option B. Illiquidity risk. DPP interests are often illiquid, so selling quickly may be difficult. Call risk involves early bond redemption, reinvestment risk involves replacing income, and currency risk involves exchange rates. Question 36. Why would low trading volume making it harder to sell quickly lead to one specific full SIE exam answer? Option A. Tax bracket risk. Option B. Voting risk. Option C. High coupon risk. Option D. Low volume liquidity risk. The correct answer is option D. Low volume liquidity risk. Low volume can make selling harder without price concessions. Coupon, voting, and tax bracket risks are different. Question 37. A quick-fire full SIE exam video asks about compensation tied to investment gains under advisory rules. Which answer fits? Option A. Markup. Option B. Performance-based fee. Option C. Sales load. Option D, bond coupon. The correct answer is option B, performance-based fee. Performance-based fees are advisory compensation tied to results and are subject to rules. Coupons, loads, and markups are different compensation or income items. Question 38. Suppose the exam stem says selling a call while owning the underlying stock. Which full SIE exam answer is strongest? Option A, covered call. Option B, naked call. Option C, long put. Option D, protective put. The correct answer is option A, covered call. A covered call involves writing a call while owning the underlying shares. A naked call lacks the stock position, a long put is a bearish right to sell, and a protective put ensures own stock. Question 39. When full SIE exam review mentions price protection at the cost of possible non-execution, which term applies? Option A, market order certainty. Option B, proxy authority. Option C, limit order trade-off. Option D, stop order trigger. The correct answer is option C, limit order trade-off. The limit order trade-off is price control versus possible non-execution. Market orders seek certainty, stop orders use triggers, and proxy authority concerns voting. Question 40. Before recording a lesson on full SIE exam, which term explains a bullish options position with limited loss to premium? Option A, long call. Option B, covered put. Option C, short stock. Option D, long put. The correct answer is option A, long call. A long call benefits when the underlying rises and the buyer's loss is limited to the premium paid. A long put is bearish, short stock gains when prices fall, and covered put is not the basic bullish call position. Question 41. Choose carefully in full SIE exam. A REIT that does not trade on an exchange and may be difficult to sell defines which term? Option A, non-traded REIT liquidity risk. Option B, ETF arbitrage. Option C, SIPC liquidation. Option D, treasury liquidity. The correct answer is option A, non-traded REIT liquidity risk. Non-traded REITs can create liquidity concerns because shares may not have an active exchange market. Treasury liquidity, SIPC liquidation, and ETF arbitrage involve other areas. Question 42. Imagine a test item says a communication implying returns that are not properly supported. What is the best full SIE exam answer? Option A, trade confirmation. Option B, balanced presentation. Option C, official statement. Option D, misleading projection. The correct answer is option D, misleading projection. Misleading projections can violate communication standards because investors may be misled about likely returns. Balanced presentation includes risks, official statements disclose municipal offerings, and trade confirmations report executed trades. Question 43. Choose carefully in full SIE exam. A dealer buying into inventory below the prevailing market price defines which term? Option A, accrued interest. Option B, markdown. Option C, sales load. Option D, management fee. The correct answer is option B, markdown. A markdown applies when a dealer buys a security from a customer into inventory below the prevailing market price. A sales load is a mutual fund charge, accrued interest belongs to bond pricing, and a management fee pays a fund advisor. Question 44. Imagine a test item says documenting how much investment loss a customer can accept. What is the best full SIE exam answer? Option A, CUSIP number. Option B, syndicate spread. Option C, coupon rate. Option D, risk tolerance. The correct answer is option D, risk tolerance. Risk tolerance is a key customer profile fact for recommendations. Coupon rates, CUSIP numbers, and syndicate spreads are product or offering details. Question 45. Which full SIE exam answer is hidden inside the clue a client disclosure document explaining advisory services, fees, and conflicts? Option A, advisor brochure. Option B, margin call. Option C, option agreement. Option D, official statement. The correct answer is option A, advisor brochure. An advisor brochure discloses advisory services, fees, and conflicts to clients. Official statements, option agreements, and margin calls are unrelated. Question 46. Choose carefully in full SIE exam. One fee covering advisory services and transaction costs defines which term? Option A, bond ladder. Option B, SIPC advance. Option C, breakpoint schedule. Option D, wrap fee program. The correct answer is option D, wrap fee program. A wrap fee program charges one fee for advisory and related services. Breakpoints, bond ladders, and SIPC advances are unrelated. Question 47. Which full SIE exam clue points to placing a retail customer's interest ahead of the representative's interest? Option A, Regulation T. Option B, MSRB Rule G17. Option C, Rule 144. Option D, Regulation Best Interest. The correct answer is option D, Regulation Best Interest. Regulation Best Interest requires broker-dealers and associated persons to act in a retail customer's best interest when making recommendations. Regulation T covers credit, Rule 144 covers restricted and control stock, and MSRB Rule G17 is a municipal fair dealing rule. Question 48. Choose carefully in full SIE exam. A fund investing in short-term high-quality instruments defines which term? Option A, Growth Fund. Option B, Money Market Fund. Option C, Variable Annuity. Option D, Closed-End Bond Fund. The correct answer is option B, Money Market Fund. A money market fund invests in short-term, high-quality debt instruments and seeks stability. A growth fund targets appreciation, a closed-end bond fund trades on an exchange, and a variable annuity is an insurance contract. Question 49. Which answer would pass an exam day check for returning customer securities held in street name after a firm liquidation in full SIE exam? Option A, Prospectus Refund. Option B, Customer Asset Return. Option C, Issuer Buyback. Option D, Bond Call. The correct answer is option B, Customer Asset Return. SIPC liquidation aims to return customer securities and cash when a brokerage firm fails. Issuer buybacks, prospectus refunds, and bond calls are separate processes. Question 50. Which full SIE exam concept separates protection if a broker-dealer fails and customer assets are missing from the other choices? Option A, SIPC protection. Option B, FDIC insurance. Option C, market loss insurance. Option D, bond rating guarantee. The correct answer is option A, SIPC protection. SIPC protects customers if a broker-dealer fails and securities or cash are missing, subject to limits. FDIC insurance covers bank deposits, market loss insurance is not provided, and bond ratings do not guarantee repayment. Question 51. What should stand out in a full SIE exam STEM about a brokerage firm liquidation rather than an issuer bankruptcy? Option A, corporate earnings miss. Option B, municipal default. Option C, broker-dealer failure. Option D, issuer default. The correct answer is option C, broker-dealer failure. SIPC is tied to broker-dealer failure and missing customer assets. Issuer default, municipal default, and earnings misses are investment risks. Question 52. Pick the SIE term connected to an exchange using an auction market and designated market makers in full SIE exam. Option A, OTC Pink. Option B, NYSE. Option C, NASDAQ. Option D, Money Market. The correct answer is option B, NYSE. The NYSE is an auction-style exchange with designated market makers supporting orderly trading. NASDAQ is a dealer/electronic market, OTC Pink is an over-the-counter quotation venue, and the money market involves short-term debt. Question 53. Which exam-tested phrase in full SIE exam is linked to receiving premium and taking on an exercise obligation? Option A, option writer. Option B, option buyer. Option C, bond holder. Option D, rights holder. The correct answer is option A, option writer. An option writer receives premium and must perform if assigned. An option buyer has a right, a bond holder owns debt, and a rights holder may buy new stock but does not have an options assignment obligation. Question 54. Suppose the exam STEM says a duty to put the client's interests ahead of the advisor's interests. Which full SIE exam answer is strongest? Option A, market making. Option B, firm commitment. Option C, fiduciary duty. Option D, suitability only. The correct answer is option C, fiduciary duty. Investment advisors are associated with a fiduciary duty to clients. Suitability only is a lower broker-dealer standard, market making quotes securities, and firm commitment is underwriting. Question 55. For full SIE exam practice, which option turns a separate cash limit within SIPC customer protection into the correct term? Option A, Treasury PAR guarantee. Option B, unlimited cash insurance. Option C, SIPC cash sublimit. Option D, municipal tax guarantee. The correct answer is option C, SIPC cash sublimit. SIPC coverage has a customer protection limit with a smaller cash sublimit. It is not unlimited cash insurance, a Treasury PAR guarantee, or a municipal tax guarantee. Question 56. Under SIE conditions, how should a customer relationship summary for retail investors be labeled in full SIE exam? Option A, Form U5. Option B, Form 10K. Option C, Form CRS. Option D, Form U4. The correct answer is option C, Form CRS. Form CRS gives retail investors a relationship summary. Form U4 and U5 relate to broker registration, while Form 10K is an issuer annual report. Question 57. Suppose the exam stem says wrongfully taking or using customer funds or securities. Which full SIE exam answer is strongest? Option A, hypothecation. Option B, reinvestment. Option C, conversion. Option D, redemption. The correct answer is option C, conversion. Conversion is the wrongful use or taking of customer property. Hypothecation pledges securities in a margin account, reinvestment uses income to buy more securities, and redemption is selling fund shares back to the issuer. Question 58. What should stand out in a full SIE exam stem about ongoing compensated advice rather than mainly trade execution? Option A, issuer role. Option B, transfer agent role. Option C, investment advisor role. Option D, broker-dealer execution role. The correct answer is option C, investment advisor role. Investment advisors are associated with compensated advice. Broker-dealers mainly affect securities transactions, transfer agents keep ownership records, and issuers create securities. Question 59. Why would a U.S. traded certificate representing foreign shares lead to one specific full SIE exam answer? Option A, T-bill. Option B, ADR. Option C, UIT. Option D, REIT. The correct answer is option B, ADR. An ADR allows U.S. investors to trade a certificate representing shares of a foreign company. A REIT owns real estate assets, a UIT holds a fixed investment portfolio, and a T-bill is short-term U.S. government debt. Question 60. A candidate sees an annuity with value tied to separate account investment performance during full SIE exam review. What should they choose? Option A, common stock only. Option B, treasury bond. Option C, fixed annuity. Option D, variable annuity. The correct answer is option D, variable annuity. A variable annuity's value depends on separate account investments and carries market risk. A fixed annuity has insurer-backed credited interest, a treasury bond is debt, and common stock alone is not an insurance contract. Question 61. If a full SIE exam stem gives only insurance with cash value tied to separate account performance, which answer is safest? Option A, treasury bond. Option B, closed-end fund. Option C, fixed annuity. Option D, variable life insurance. The correct answer is option D, variable life insurance. Variable life insurance involves investment risk because cash value depends on separate account performance. Fixed annuities provide insurer guarantees, treasury bonds are government debt, and closed-end funds are investment companies. Question 62. Under SIE conditions, how should an electronic dealer market with competing market makers be labeled in full SIE exam? Option A, NASDAQ. Option B, Treasury Direct. Option C, NYSE Floor Auction. Option D, Municipal Issuer. The correct answer is option A, NASDAQ. NASDAQ is an electronic dealer market where market makers quote prices. The NYSE floor auction uses a different structure. Treasury Direct sells government securities, and a municipal issuer raises public funds. Question 63. For full SIE exam practice, which option turns a need to check risk tolerance, liquidity needs, and tax situation before recommending a DPP into the correct term? Option A, FDIC verification. Option B, automatic approval. Option C, DPP suitability review. Option D, tender offer filing. The correct answer is option C, DPP suitability review. DPPs require careful suitability review because they may be illiquid, complex, and tax-driven. They are not automatically approved for every customer. FDIC verification concerns bank deposits, and tender offer filings are separate. Question 64. Pick the SIE term connected to the account holding variable annuity investment options in full SIE exam. Option A, special memorandum account. Option B, general account. Option C, separate account. Option D, sinking fund. The correct answer is option C, separate account. The separate account holds variable annuity investment portfolios. The general account backs fixed guarantees, a sinking fund retires debt, and SMA is a margin account concept. Question 65. Which choice best matches protection that does not guarantee investment value on a full SIE exam question? Option A, guaranteed profit. Option B, guaranteed yield. Option C, no performance guarantee. Option D, guaranteed tax result. The correct answer is option C, no performance guarantee. SIPC does not guarantee profits, yields, or investment value. It is a customer asset protection system for failed broker-dealers. Question 66. Pick the SIE term connected to holding or having access to client funds or securities in full SIE exam. Option A, coupon custody only. Option B, custody of client assets. Option C, syndicate custody. Option D, proxy custody only. The correct answer is option B, custody of client assets. Custody means holding or having access to client assets and creates regulatory obligations. The other choices do not describe advisory custody. Question 67. Review the scenario buying a put to protect stock already owned. Which full SIE exam choice matches? Option A, short put. Option B, covered call. Option C, long call only. Option D, protective put. The correct answer is option D, protective put. A protective put uses a long put to limit downside on a stock position. A covered call sells upside, a short put creates a purchase obligation, and a long call is bullish without owning the stock. Question 68. When full SIE exam review mentions mixing customer securities with firm securities improperly, which term applies? Option A, breakpoint. Option B, diversification. Option C, commingling. Option D, annuitization. The correct answer is option C, commingling. Commingling customer and firm assets improperly violates customer protection principles. Diversification spreads risk, breakpoints reduce sales charges, and annuitization creates income payments. Question 69. During full SIE exam practice, what does a liquidation process using a trustee to return customer property describe? Option A, proxy committee. Option B, transfer syndicate. Option C, underwriting syndicate. Option D, SIPC trustee process. The correct answer is option D, SIPC trustee process. A SIPC liquidation may involve a trustee working to return customer property. Syndicates and proxy committees have different roles. Question 70. After reading a large market order moving through several price levels, which full SIE exam concept should not be confused with distractors? Option A, market impact risk. Option B, proxy contest. Option C, accrued interest. Option D, tax equivalent yield. The correct answer is option A, market impact risk. A large market order may move the price as it executes through available quotes. Accrued interest, tax equivalent yield, and proxy contests are unrelated. Question 71. Imagine a test item says a written statement alleging a sales practice violation. What is the best full SIE exam answer? Option A, customer complaint. Option B, QZIP request. Option C, tombstone ad. Option D, trade confirmation. The correct answer is option A, customer complaint. A customer complaint is a written allegation of misconduct or sales practice concern. Trade confirmations report transactions, tombstone ads announce offerings, and QZIP requests identify securities. Question 72. Which full SIE exam answer is hidden inside the clue investors trading outstanding shares with each other? Option A, treasury auction. Option B, private placement. Option C, primary market. Option D, secondary market. The correct answer is option D, secondary market. The secondary market is where existing securities trade between investors after issuance. The primary market sells new securities, a private placement sells directly to selected investors, and a treasury auction is a government issuance process. Question 73. Which full SIE exam answer is hidden inside the clue the federal agency enforcing securities laws? Option A, SEC. Option B, FDIC. Option C, FINRA. Option D, MSRB. The correct answer is option A, SEC. The SEC enforces federal securities laws and oversees the securities markets. FINRA regulates broker-dealers, the MSRB writes municipal securities rules, and the FDIC ensures bank deposits rather than securities. Question 74. Which full SIE exam clue points to a dispute resolution process often used for customer-broker disputes? Option A, underwriting. Option B, annuitization. Option C, arbitration. Option D, hypothecation. The correct answer is option C, arbitration. Arbitration is a formal dispute resolution process used in the securities industry. Underwriting distributes new issues, annuitization converts annuity value to payments, and hypothecation pledges margin securities. Question 75. Identify the tested full SIE exam concept behind an over-the-counter security with limited market depth. Option A, annuity mortality risk. Option B, Roth conversion risk. Option C, OTC liquidity risk. Option D, FDIC risk. The correct answer is option C, OTC liquidity risk. Some OTC securities can have limited market depth, creating liquidity risk. FDIC, Roth conversion, and annuity mortality risks are unrelated. Question 76. Before recording a lesson on full SIE exam, which term explains the minimum equity a long margin account must keep? Option A, loan consent. Option B, sales charge. Option C, initial margin. Option D, maintenance margin. The correct answer is option D, maintenance margin. Maintenance margin is the minimum equity that must remain in a margin account after purchase. Initial margin applies at the time of purchase, sales charge is a fund cost, and loan consent allows securities lending but is not the equity minimum. Question 77. Which full SIE exam answer is hidden inside the clue the required disclosure explaining standardized options risks? Option A, official statement. Option B, proxy statement. Option C, options disclosure document. Option D, account statement. The correct answer is option C, options disclosure document. The options disclosure document explains standardized options and their risks before options trading is approved. Official statements belong to municipal offerings, proxy statements solicit votes, and account statements summarize account activity. Question 78. Pick the SIE term connected to the self-regulatory organization for broker-dealers in full SIE exam. Option A, FINRA. Option B, MSRB. Option C, SIPC. Option D, SEC. The correct answer is option A, FINRA. FINRA is the self-regulatory organization that oversees broker-dealers and registered representatives. The SEC is the federal securities regulator, the MSRB focuses on municipal securities rules, and SIPC protects customers if a broker-dealer fails. Question 79. Can you spot the full SIE exam answer when the clue is a broker-dealer recommendation standard focused on the retail customer's best interest? Option A, MSRB markup rule. Option B, SIPC rule. Option C, Investment Company Act only. Option D, regulation best interest. The correct answer is option D, regulation best interest. Regulation best interest applies to broker-dealer recommendations to retail customers. Investment company, SIPC, and MSRB markup rules do not define this standard. Question 80. Which choice best matches commodity futures contracts outside normal SIPC securities protection on a full SIE exam question? Option A, SIPC stock coverage. Option B, SIPC cash coverage. Option C, no SIPC futures coverage. Option D, SIPC bond coverage. The correct answer is option C, no SIPC futures coverage. SIPC focuses on securities and cash and brokerage accounts, not ordinary commodity futures contracts. Stocks, cash, and bonds may be within the normal customer asset framework. Question 81. During full SIE exam practice, what does the day cash and securities are exchanged to complete a trade describe? Option A, trade date. Option B, declaration date. Option C, ex-dividend date. Option D, settlement date. The correct answer is option D, settlement date. Settlement date is when the buyer pays and the seller delivers securities. Trade date is execution day, ex-dividend date determines dividend eligibility cutoff, and declaration date is when a dividend is announced. Question 82. Where does customer shares missing from the records of a failed broker-dealer fit inside full SIE exam review? Option A, tax loss claim. Option B, missing securities claim. Option C, dividend preference. Option D, market loss claim. The correct answer is option B, missing securities claim. SIPC protection is aimed at missing securities and cash at a failed firm. Market losses, tax losses, and dividend preferences are not the same claim. Question 83. A quick-fire full SIE exam video asks about coverage tied to accounts at member broker-dealers. Which answer fits? Option A, insurance policy claim. Option B, bank savings account. Option C, SIPC member firm account. Option D, commodity pool only. The correct answer is option C, SIPC member firm account. SIPC protection applies through member broker-dealers. Bank accounts, insurance claims, and commodity pools are not the core SIPC customer account coverage. Question 84. Which full SIE exam concept separates a firm arranging a trade for a customer and charging a commission from the other choices? Option A, broker acting as agent. Option B, dealer acting as principal. Option C, issuer acting as seller. Option D, transfer agent acting as record keeper. The correct answer is option A, broker acting as agent. A broker acting as agent executes on behalf of a customer and is compensated by commission. A dealer acts as principal from inventory, an issuer sells its own securities, and a transfer agent maintains ownership records. Question 85. A short full SIE exam question says the customer gets execution but not a guaranteed price. Which option wins? Option A, stop price activation. Option B, market order price risk. Option C, limit price protection. Option D, all or none restriction. The correct answer is option B, market order price risk. Market orders generally provide execution speed but not price certainty. Limit price protection, stop activation, and all or none restrictions describe different order features. Question 86. When full SIE exam review mentions using reasonable diligence and care when making a recommendation, which term applies? Option A, care obligation. Option B, custody only. Option C, registration termination. Option D, dividend election. The correct answer is option A, care obligation. The care obligation requires reasonable diligence and care in recommendations. Custody, termination, and dividend elections do not describe this reg by requirement. Question 87. A quick-fire full SIE exam video asks about the anti-fraud rule often linked to deceptive securities practices. Which answer fits? Option A, Regulation T. Option B, SIPC Rule 500. Option C, Rule 10b-5. Option D, Rule 144. The correct answer is option C, Rule 10b-5. Rule 10b-5 is a major anti-fraud rule used against deceptive practices, including insider trading. Rule 144 covers resales, Regulation T covers credit, and SIPC Rule 500 is not the standard SIE anti-fraud answer. Question 88. During full SIE exam practice, what does selling borrowed shares and hoping to buy them back lower describe? Option A, long purchase. Option B, short sale. Option C, covered call. Option D, rights offering. The correct answer is option B, short sale. A short sale involves borrowing shares, selling them, and hoping to repurchase them at a lower price. A long purchase profits from rising prices, a covered call is an option strategy, and a rights offering is a primary market shareholder right. Question 89. If a full SIE exam stem gives only a wide bid-ask spread increasing the cost of selling, which answer is safest? Option A, tax risk. Option B, reinvestment risk. Option C, call risk. Option D, liquidity risk. The correct answer is option D, liquidity risk. Wide bid-ask spreads can signal poor liquidity and higher trading cost. Call, reinvestment, and tax risk do not describe this trading problem. Question 90. During full SIE exam practice, what does limited protection for missing securities and cash at a failed brokerage firm describe? Option A, SIPC coverage limit. Option B, issuer guarantee. Option C, FDIC bank limit. Option D, unlimited market protection. The correct answer is option A, SIPC coverage limit. SIPC provides limited protection for missing customer assets when a brokerage firm fails. It does not provide unlimited market protection, FDIC bank coverage, or issuer guarantees. Question 91. Can you spot the full SIE exam answer when the clue is securities trading away from a listed exchange? Option A, auction market. Option B, dividend market. Option C, over-the-counter market. Option D, primary market. The correct answer is option C, over-the-counter market. The over-the-counter market covers securities traded outside a centralized exchange listing. The primary market issues new securities, an auction market matches exchange orders, and dividend market is not a standard SIE market category. Question 92. A quick-fire full SIE exam video asks about a firm selling securities from its own inventory with a markup. Which answer fits? Option A, broker acting as agent. Option B, dealer acting as principal. Option C, clearing agency acting as custodian. Option D, investment advisor acting as fiduciary. The correct answer is option B, dealer acting as principal. A dealer acts as principal when it trades from its own account and earns a markup or markdown. A broker earns a commission as agent, an advisor is paid for advice, and a clearing agency supports settlement rather than selling inventory. Question 93. A short full SIE exam question says trading on material non-public information. Which option wins? Option A, breakpoint sale. Option B, churning. Option C, selling away. Option D, insider trading. The correct answer is option D, insider trading. Insider trading involves trading while using material non-public information. Selling away is unauthorized outside securities business, churning is excessive trading for commissions, and breakpoint sale avoids mutual fund discounts. Question 94. A SIE full SIE exam item describes a graph comparing yields across maturities for similar bonds. Which answer fits? Option A, yield curve. Option B, fund prospectus. Option C, proxy ballot. Option D, order book. The correct answer is option A, yield curve. A yield curve shows yields by maturity for similar debt securities. An order book shows trading interest, a prospectus describes an offering, and a proxy ballot records shareholder votes. Question 95. Imagine a test item says a fast-moving market causing execution far from the last quoted price. What is the best full SIE exam answer? Option A, bond amortization. Option B, breakpoint discount. Option C, dividend adjustment. Option D, market order slippage. The correct answer is option D, market order slippage. Market order slippage can occur when prices move quickly before execution. Dividend adjustments, amortization, and breakpoint discounts are unrelated. Question 96. Identify the tested full SIE exam concept behind thin trading outside regular hours increasing execution uncertainty. Option A, wash sale risk. Option B, after hours market order risk. Option C, bond call risk. Option D, FDIC risk. The correct answer is option B, after hours market order risk. Market orders outside regular hours can face wider spreads and less liquidity. FDIC, bond call, and wash sale risks are different. Question 97. A candidate sees being paid to give securities advice as a business during full SIE exam review. What should they choose? Option A, issuer. Option B, broker-dealer only. Option C, investment advisor. Option D, transfer agent. The correct answer is option C, investment advisor. An investment advisor is generally paid for securities advice as a business. Broker-dealers execute securities business, transfer agents track ownership, and issuers create securities. Question 98. Which full SIE exam answer is hidden inside the clue? A position where losses can grow as the stock rises. Option A, short stock position. Option B, long stock position. Option C, long put. Option D, treasury bill. The correct answer is option A, short stock position. A short stock position has theoretically unlimited loss potential because a stock price can keep rising. A long put has loss limited to premium, a long stock position can lose only down to zero, and a treasury bill is short-term debt. Question 99. Imagine a test item says a stop order executing far from the stop price after a price gap. What is the best full SIE exam answer? Option A, guaranteed stop price. Option B, guaranteed limit price. Option C, stop order gap risk. Option D, guaranteed dividend. The correct answer is option C, stop order gap risk. A stop order becomes a market order, so a price gap can cause execution away from the stop price. It does not guarantee the stop price, a limit price, or dividends. Question 100. Which answer would pass an exam day check for a demand to deposit cash or securities when equity is too low in full SIE exam? Option A, margin call. Option B, dividend notice. Option C, trade confirmation. Option D, proxy request. The correct answer is option A, margin call. A margin call requires a customer to add equity when margin requirements are not met. Dividend notices involve distributions, trade confirmations report executions, and proxy requests relate to voting.